Since the beginning of the year, the stock market, the Dow Jones Industrial Average, group of 30 companies, going up. S&P 500, group of 500 companies, going up. Gold, up. Silver, up. Crypto, Bitcoin, Ethereum, since the beginning of the year, up. Everything's going up. But you don't feel like things are going well for you. But it seems like everything's going up and you're getting hit with inflation. So what's happening? Why is it that you and I don't feel better off, yet it seems like there's a group that is doing much better? Well, it's because there's a game and you may not be playing it right. The rich are playing it right. What are they doing? They're owning these assets. And if they own the assets, they go up in value. They don't sit around holding dollars. That's why I always say the dollar is dead. Welcome, I'm Brian. 3 days a week, Monday, Wednesday, Friday, I put on this particular show where I try to encourage people to get out of debt, take a look at the economy, we look at interest rates, and then every Friday we talk about what can you do to mimic what the wealthy do. Regardless of your salary, you can always invest or try to invest a little bit every week, every 2 weeks, every month. And how can you keep ahead of inflation so that you can maintain your wealth? I try to point out what the charts show us, past data. Over the last 100 years, the dollar has lost 99% of its value. Housing prices have shot up, inflation, you name it. In the last couple of years, it really took off. As we all know, inflation went through the roof, prices went up, and people say, oh, well, it's only 3% now. Well, that's more of a month-over-month, year-over-year. But the prices, when they shot up, stayed there. And now they're going up incrementally. So they still went up, and that didn't go away. So what do? Cash is more of a transactional thing. I'm talking about a dollar, meaning you need it on a month-to-month to pay your bills. And you do need an emergency fund. We go over that. I've got videos on how to make it extend longer, that sort of thing. But every Friday, we look at prices, and I started this back in February, of various assets. In other words, you can take some of your dollars, keep it for an emergency fund, but the longer term dollars you may want to turn into other things. That's what the wealthy do. That way, even though there's inflation and things are getting more expensive, well, they're not holding on to dollars. They're holding on to things like gold, silver, stocks, things that pay dividends, mutual funds or ETFs that invest in things like the S&P 500, because over a long period of time, it goes up year over year. Markets always go up and down, but if you zoom out for a long period of time, you'll see that typically they go up and to the right. So over time, you're better off holding something other than dollars. So let's take a look at here. I started this in February at the various things we track. Let's start with savings, 3-month CD, and a 3-month treasury. If you're familiar, you go to the bank, you lock up your money for 3 months, or you buy a treasury. The treasury is from the federal government. To me, this is just another way of saving cash, but here are the rates. The source I use does it once a month. You can see from February, 2 weeks ago, you can see from February, and now the rates are pretty much the same. Savings 0.45, CDs 1.53, Treasury 5.46, barely beating inflation. Now let's move down, but they are, of course, low risk because you're going to get that money back that you put into a CD plus your rate of return. Now, gold, silver, Bitcoin, Ethereum, commodities that can be bought with your cash and then turned back into cash. And I've got videos on how to do that quickly using things such as an ETF or as opposed to actually having the physical gold. But look at February, 20,050, and now it's 2,418. That's gold. It's gone up since last week as well. Or I guess it was 2 weeks ago I did the last show. Silver was 22.88. Now it's 31.12. That's a 50% jump. Can you tell me that the cash in your bank account just went up by 50%? You had $1,000 in and all of a sudden you had $1,500? No. But silver did. Bitcoin, 43,000. 2 weeks ago it was actually 61,000. Now it's 57.8. It's very volatile. Not saying you should buy any of these things. This is never financial advice. It's just what I do, informational purposes only. Ethereum, $22.99 beginning of the year. It was $3,400 2 weeks ago. Now it's $31.14. Now, crypto is something that personally I believe in. I actually have another channel where I talk about crypto. It's considered very risky. Some people believe in it. Some people don't. You got to make up your own decision. but it's looked at these days as Bitcoin being a store of value, similar to gold. And Ethereum's more like the world's computer, the number one, what you would call altcoin in terms of market cap. Okay, now, let's look at other assets that the rich hold. Dow Jones. Earlier this year was 38,654. Now it's almost 40,000, 39,966, and it has hit 40,000 this year. S&P 500, 49.58. Now 56.34. It's going up as well. And you can buy ETFs that invest in these and mimic them. All right, lastly, I always look at inflation. June numbers are out, 3%. It's still 3% or higher. And then treasury bills, 2-year and 10-year. 2-year is up, 4.489. 10-year is 4.208. That's up as well. Here's what's most important. Here is the chart showing that they are inverted. The 2-year and the 10-year are inverted. Okay, why do we look at these last three things? Inflation. Because the Federal Reserve has said that their mandate is twofold. Keep inflation down, keep unemployment down. So they're dealing with rates and whether or not they're going to cut rates, which means things like personal loans and car loans and whatnot might come down. They're not going to cut those rates unless they meet their target goals. That's what they said. We don't know what they're going to do. They haven't cut rates this year. They might. Now, the markets want them to cut rates because it means money's cheaper. If money's cheaper, companies can borrow it, and the stock market and other assets can continue to flourish. Then we look at the 2-year and the 10-year, because when they're inverted, which means it's below zero, you saw on that chart, which they've been inverted for a while, that's a sign that we're in a recession. Okay, what does this all mean? Well, I cannot tell you where the market's going to go. I can't tell you what's going to happen to real estate. Personally, I think it's overpriced, and it might come down. Stock market, I think, is going to come down. I think we're in an asset bubble. I could be right. I could be wrong. So what do? I dollar cost average. That means that every month, usually on a 2-week cycle, I'm taking a portion of my income and I'm buying things like gold and silver, Bitcoin and Ethereum and stocks and ETFs. I've carved it out and I've diversified across a large group. Yes, I have emergency savings of cash, but then over and above that, I spread it out, just like the wealthy do. I want to beat inflation. If I can make additional capital increases, in other words, the stock prices go up or the commodity prices go up, great. Things like commodities aren't paying dividends. So that's what I want to point out every week. I want to change your mindset so that you can play the game the right way. Because the rich do not care if there's inflation. Because typically, what do they care if they have millions of dollars and eggs doubled in price? Is it really going to affect them? Well, no, because they look at their assets and their stocks are through the roof. Their Nvidia stock's up 400% or whatever they might be invested in. Are you enjoying 400% gains on the money that you have? So start thinking outside the box. Realize that there is a financial game and you may not be playing it right. Thank you for watching. Please subscribe. Please hit the like button if this content's helpful to you. And like I always say, even though I know it gets repetitive, the government does not care about you. The banks don't care about you. Real freedom is financial freedom, and it's up to you to take responsibility for your finances. Have a great day.